So let's talk about penny stocks. High risk, high reward lottery tickets of the stock market. Shares of small companies trading for under $5 or £1. Buy thousands of shares for the cost of one big name tech stock. The dream is that one tiny company becomes the next big thing. But it comes with massive risk. Platforms like Trading 212 are restricting ultra-micro-cap penny stocks, citing regulatory concerns and liquidity risk. It's hard to buy or sell without affecting the price. This limits access to speculative stocks. It's to protect investors but changes the game. We'll focus on more accessible penny and small-cap stocks. These have stronger fundamentals. We're looking for hidden gems, not just lottery tickets. So grab your coffee, smash that like button, and let's get into it. Let's kick things off in the UK with Warpaint London, trading as W7L. This isn't your typical penny stock. Warpaint owns W7 and Technic, affordable quality makeup brands. They're profitable, with low debt and strong cash flow. In small caps, that's a unicorn. Warpaint's smart growth and loyal customers make it a standout. Next up, we have another UK-listed company, but this one is in a completely different sector. Let's talk about Foresight Group Holdings, ticker FSG on the London Stock Exchange. This is an infrastructure and private equity investment manager. Essentially, they invest in things like renewable energy projects, solar farms, wind turbines, and other sustainable infrastructure. They manage these assets on behalf of their clients, which include both institutional and individual investors. The reason Foresight Group makes this list is because of its position in a massive growth industry. The global push towards sustainability and green energy isn't just a trend, it's a multi-trillion-dollar shift in the global economy. Governments and corporations are pouring money into this space, and Foresight is right in the middle of it, facilitating those investments. They have a diverse portfolio of assets that generate steady, long-term income streams. This isn't a speculative tech startup, it's a company managing real, essential assets. Financially, Foresight is rated very well. They have a solid track record of growing their assets under management, which is the key metric for a company like this. Our third pick is a company that operates in a very interesting and somewhat counter-cyclical niche. Let's dive into Begbie's Trainer Group, trading on the AIM under the ticker BEG. This company is the UK's leading corporate rescue and recovery specialist. In simple terms, when other businesses get into financial trouble, they're the ones who get called in to help. They handle things like corporate restructuring, insolvency, and administration. It might not sound glamorous, but it's an incredibly stable and necessary service. The reason Begbie's Trainer is so compelling, especially right now, is because their business model thrives on economic uncertainty. When the economy is booming, there's less demand for their services. But when interest rates are high, inflation is squeezing margins, and companies are struggling with debt, which is the environment we've been in, that's when Begbie's Trainer gets very, very busy. They are essentially a hedge against economic downturns. While other companies are struggling, their pipeline of work is growing. They have an incredibly strong rating and a dominant position in the UK market. They've been around for a long time and have built a reputation as the go-to firm for corporate recovery. Alright, let's move on to our fourth pick, Ultimate Products, which trades on the London Stock Exchange under the ticker ULTP. This company is a fascinating business. They own, manage, license, and develop a whole portfolio of well-known consumer goods brands. We're talking about household names like Salter, which is famous for kitchen scales, Beldray for cleaning products, and Progress for cookware. They don't just own these brands, they are masters of sourcing, marketing, and distributing them to a massive network of retailers. The core of their strategy is to take established brands with strong consumer recognition and revitalize them. They are experts at product development and supply chain management, sourcing high-quality goods from around the world at competitive prices. This allows them to sell products that people already know and trust, but at a price point that appeals to budget-conscious shoppers. They sell through a huge range of channels, from major supermarkets and high street discounters to online giants like Amazon. This multi-channel approach makes them incredibly resilient. What makes Ultimate Products a lower risk proposition in the small cap world are its solid fundamentals. This is a profitable, cash generative business with a history of rewarding shareholders through dividends. Now for something completely different. Let's get our hands dirty and look at Van L Holdings, ticker VANL on the AIM market. Van L is the UK's largest specialist geotechnical engineering contractor. That's a fancy way of saying they build the foundations for things. We're talking about piling and ground engineering for everything from new housing developments and railway lines to giant warehouses and energy infrastructure. If you're putting up a big structure, you need a solid base, and that's where Van L comes in. The investment case for Van L is directly tied to UK infrastructure spending and house building. These are massive sectors with long-term tailwinds. The UK has a chronic housing shortage, and the government is committed to significant infrastructure investment, including projects like HS2 and renewable energy installations. Van L is perfectly positioned to benefit from all of this activity. They are the experts in a highly specialized technical field, which creates a significant barrier to entry for potential competitors. Let's shift back to the world of finance with our sixth pick, Polar Capital Holdings, which trades on the AIM under the ticker Polar. Polar Capital is a specialist active asset management group. What that means is they manage investment funds with a focus on specific sectors or themes, and they are known for their expertise in areas like technology, healthcare, and emerging markets. Unlike passive index funds, they actively pick stocks, aiming to outperform the market. The reason Polar Capital is on this list is because it's a high-quality business that can be bought at a reasonable price, especially when market sentiment is weak. The fortunes of an asset manager are tied directly to the performance of financial markets. When markets are going up, their assets under management increase, and so do their fee revenues. When markets fall, their assets under management and revenues take a hit. This creates cycles in their stock price, and buying during a period of weakness can be a very profitable long-term strategy. Polar Capital has a moderate rating, but what makes it a potential pick is its specialized nature and strong brand. They have built a reputation for excellence in their chosen fields, particularly in technology investing. Their fund managers are well respected and have a long track record. Let's add some shine to our portfolio with Cerabee Gold, trading on the London Stock Exchange as SRB. Cerabee is a gold miner in Brazil, producing and selling gold from its Palito mine with a second project underway. Gold often moves independently of the stock market, acting as a safe haven during uncertainty. Cerabee's recent performance has been strong, benefiting from high gold prices. Let's dial up the risk and reward with AXCap Ventures, trading over the counter as GARF and on the CSE in Canada. This is a true microcap, highly speculative play. AXCap acquires and explores undervalued gold projects, aiming for big discoveries. It's a high-risk, high-reward strategy. Most projects fail, but a big find can be life-changing. Let's pivot from digging for gold in the ground to mining for digital gold. Our ninth pick is Hyperscale Data, which trades on the AIMX under the ticker GPUS. This company is tapping into the explosive growth of the crypto and AI industries, but with a unique angle. They are not a crypto miner in the traditional sense. Instead, they are building out high-density data center infrastructure specifically designed to host high-performance computing and GPU-intensive operations. Think of them as the landlords for the crypto mining and AI industries. The investment thesis here is simple. The demand for computing power is exploding. The rise of Bitcoin mining, and even more so, the insatiable demand for GPUs to train AI models has created a massive bottleneck. There simply isn't enough specialized data center capacity to go around. Hyperscale Data is stepping in to fill this gap. They build and operate the physical facilities with the massive power and cooling infrastructure required to run thousands of power-hungry GPUs 24/7. This is a picks and shovels play on the crypto and AI gold rush. Let's shift gears and talk about the future of transportation. Pony.ai, recently listed on Nasdaq, is a leading autonomous driving tech company. They focus on China and the US, developing robotaxis and long-haul trucking solutions, competing with giants like Waymo and GM's Cruise. Pony.ai is nimble, achieving significant technical milestones. They operate fully driverless robotaxi services in Beijing and Guangzhou. Strategic partnerships with Toyota and SAIC bolster their position. Prepare to have your mind bent. Our 11th pick is D-Wave Quantum, a pioneer in quantum computing. D-Wave trades under QBTS and is one of the few pure-play quantum computing companies. Their quantum annealing tech solves real-world business problems, from logistics to drug discovery. D-Wave's stock has rallied, fueled by AI hype and growing commercial traction. For our final pick, let's talk about something traditional, but still vital: oil shipping. Imperial Petroleum, ticker IMPP, owns and operates tankers transporting oil worldwide. The shipping industry is cyclical. Profits soar when day rates are high, but drop when rates fall. Today, strong demand, limited new ships, and global disruptions are boosting tanker fundamentals. So there you have it. A deep dive into 12 penny and small cap stocks with interesting stories for 2025 and 2026. We've covered everything from cosmetics and infrastructure in the UK to high-risk gold explorers and frontier tech like quantum computing. The goal here was to show you the sheer diversity of opportunities that exist at the lower end of the market. But